But let's talk about something more interesting. The AI bubble. Is it a bubble, or are we just seeing continued growth? And this is where things get really interesting. Without data center construction and AI infrastructure spending, US economic growth would basically be zero. So is this a bubble? Well, Jeff Bezos has called it an industrial bubble, and hyperscaler companies such as Microsoft, Amazon, Meta, and Google are collectively spending nearly $400 billion annually on AI infrastructure. And if that spending slows down or the returns don't materialize, the US economy could be in real trouble. And that's where diversification into real, tangible bricks and mortar assets in a growing market becomes even more compelling. Now here's the counterpoint. This is where Southeast Asia really shines. While the West is dealing with sluggish growth and potential bubbles, Southeast Asia economies have fundamentals that property investors absolutely love. Inflation across most of the region is between 1% and 3%. Interest rates are being cut or are already extremely low. As an example, Indonesia just reduced their rates to 5%, and Malaysia made its first cut in 5 years. This is great news for property financing and values, and the demographics are awesome. ASEAN will add 112 million people to its middle class by 2035. It's only 10 years away, and Asia's discretionary spending is projected to grow from 23 trillion to 35 trillion over the next decade. That's an enormous wave of domestic demand for housing, retail, lifestyle properties, etc. So let's be honest about the risks. And this is where the Economist Intelligence unit did not sugarcoat it. China-Taiwan tensions aren't going away. Aerial intrusions into Taiwan's air defense zone have increased steadily, with major spikes around military drills. As for the Middle East, although things do seem to be calming down, there's no guarantee that this volatility isn't going to come back in conflict hotspots. For property investors, this means diversification isn't just smart, it's essential. And it means choosing somewhere like Southeast Asia, which has stability, strong legal frameworks, and genuine good growth fundamentals. So what's the takeaway? Global growth is sluggish. The US economy may be more fragile than the headlines suggest, but capital needs to go somewhere. Southeast Asia sits at an intersection of supply chain diversification, AI infrastructure investment, and a booming middle class. Chinese, Russian, and many other nations are already recognizing this, and this is exactly why we built RUMAVI, to help international investors navigate these markets with transparency and local expertise. If you are considering property in Southeast Asia, whether it's Thailand, Vietnam, Malaysia, or somewhere else, we can help you make sense of it. The link's in the bio. I'm Alexander, and I'll see you in the next one.